Today is January 7th, guys. We didn't really have an opportunity to touch base with you yesterday, but wanted to touch base with you today and talked about a little bit about what happened from Monday and yesterday and what's going on today. As we talked about in Monday's video, we had the 61.8 that was breached on the euro. Remember, guys, we were looking right around this level right here. And we said that a breach of this level would mean that we're going to move down to test the 33 or the 32. We talked about the 200 SMA, and lo and behold, guys, look at this thing. It taps the 200 SMA. This is a 4-hour chart. Taps the 200 SMA, bounces off of it. Exactly like what we were talking about. We talked about two different things here. We talked about the getting short when it broke the 61.8 fib, and also looking to get out or reverse it when we hit the 200 SMA. And both those things followed through. So very nice. So what we've got right now, currently, again, this is January 7th, getting into Asia right now. And what we're looking at here is a retracement from here down to here. And to be honest with you, we might even want to adjust this. Hold on one second, guys. Let's take a look. Because one thing about fibs, for those of you who have not watched my fib videos, is you want to get in the momentum. Okay, so if you've gotten a retracement level, I don't count that. Fibs are one of those things that they're very speculative depending on who's drawing them. But me, I like cutting my momentum out and see this move to here. We retraced here, and that was a good enough retracement for me not to count it. So I'm counting this as the top. From here down, we didn't really get any good retracement. So here you can see that we almost tapped the 50 fib on this move back. So this thing is still bearish currently. Not to say that it won't pull back up, but we definitely have a trend line down. We do have the 200 SMA. This is a 4-hour chart again. That's still offering support. So right now we're kind of channeling here between the 50 fib and the 200 SMA. That's a pretty big range since we're talking about a 4-hour chart. We're looking at a good 400 pips of range there. Now where is it going to go? Well, it's hard to say, guys, but I do think that we're probably going to get into a period of dollar weakness. We've sold down here significantly, and since we've broken trend, we had this big uptrend on euro. We kind of broke that trend when we pulled down here, but it's not to say that we can't start resuming. We've got trend lines coming up right in this area. You can see right through here. So we definitely have some support down here on the euro, and I don't think we have any reason fundamentally for a strong dollar. We also have non-farm payroll coming up, guys, just 2 days away. And my guess is we're going to get some just god-awful figures. I don't see any way around it at this point in time. For anybody who's aware of economic data, guys, we traded the ADP this morning and made some pips off of that. You saw the huge move. Anybody who's trading probably noticed this right around 8:15 to 8:30 this morning. You saw a huge move on the pound. Well, that was ADP employment that came out, and the numbers were just terrible, close to negative 700K on jobs. So we're talking about 700,000 jobs lost for the month of December on ADP. Now ADP is not a 100% solid indicator of what's going to happen with non-farm, but my guess is that non-farm will probably be worse than what ADP has been predicting. That has pretty much been the trend. Last month, ADP predicted nowhere close to as bad as non-farm was, and the month before that as well. So that's kind of the outlook. So there's good reason to see a weak dollar. So moving forward here, I would look for a little bit of dollar weakness, and this could very well go through these 50 fibs. And just keep in mind the 61.8 significant. We break this level, start looking for buying. You could very well buy before that, but if you want to wait for confirmation, that's one way to do it. There's no harm in waiting for confirmation on a trade. Let's take a look at a 15-minute chart here. And you can see that we're pretty tight here on Euro USD. Got a little bit of a downtrend forming here on the 15-minute. And again, we're looking at Asia right now, so you can see we've got a little bit of a downtrend pushing down here on this trend line. Haven't quite made it back up here. Got a little bit of resistance there right around the 36.20 level or so. And got a little bit of support here with the 200 SMA. This right here is a rollover pattern on MACD that kicked in right here at the bottom. Anybody who's watched our MACD training knows about how to take trades based on this MACD system. And that was a nice setup. Very nice rollover. Looks like it moved up about 50 pips there. Could have traded that with, let's see what kind of stop you could have gotten away with here. I probably could have got away with using about a 10 or 15 pip stop there, so it could have been a very good trade for you. But where we're at now, we could go either way here. Again, we got a little bit of upper momentum. Normally, when you see this on MACD, you're going to probably roll over to this side a little bit, but doesn't mean we're going to break this trend line. But this trend line is kind of the place to go. If we break this, probably going to continue up. Let's take a quick look over at pound USD. Tomorrow is the big day for the United Kingdom, guys. Bank of England is going to be releasing their interest rate statement tomorrow, and there is forecast to be some major slashing of rates, guys. So we just need to be aware of that when trading these markets. And again, guys, the Bank of England is looking to forecast of a half percent cut. So this is significant. I mean, a half cut is definitely going to move the market, and there's rumors fluttering about that they might cut deeper than that. So obviously that's something to watch for. You can see here on a 15-minute chart that we have been selling back off. We saw this huge rally. Let's take a look at the hour, or 4 hour, I'm sorry, and you can see we were talking about this level on pound USD back some time ago, and we were talking about this sell-off from here, right? Well, that sold off nicely. Didn't quite get to 44 like we wanted to see, but we got to 45. Still a nice, 250 pip sell-off. Very nice move, and that was easy capture. Now, this huge rally we've seen and just broke straight through the 200 SMA here on a 4 hour. We got a little bit of bounce here, but I mean, just rallied right through it. And a lot of this is, I believe, is people actually coming to the realization the pound is severely undervalued to the dollar and to the euro at this point in time, and I think traders are starting to realize that. But bottom line here is that we've already started to see some selling pressure. And again, we're looking at January 7th during Asia, some selling pressure heading into this interest rate statement. You pull back down to a 15-minute chart, and you can see these people selling this thing. This is based on the interest rate cuts, guys. This will probably continue into tomorrow's interest rate statement. I don't know how much heavier we're going to get here. We might come down and test this 15-minute 200 SMA. This is kind of low for us to get, but we might get there. This would take us down to about 48.80, and it's possible that we could get down there before this interest rate statement is released. Either way we go about it, guys, tomorrow after the interest rate statement, look for a bullish pound USD. Again, look for a bullish pound USD after the interest rate statement releases. And the reason for that, guys, and I'm running out of time here, we've been talking for a while, but the reason you want to look for a bullish pound USD after release is because people are selling this thing in anticipation of a rate cut. They come out, the rate cut's over with, people start buying again. It's just that simple. If you check history, almost any time you get an interest rate statement, you get a reversal of trend afterwards. Now, if they cut deeper, you might see a little bit of an extension on continued selling pressure, but even with that, probably within the next 24 hours after the interest rate statement, you'll see this thing dissipate. Well, guys, that's all we've got for today. Hopefully, we'll check you back here tomorrow, guys. Good luck with the UK interest rate statement, and especially with non-farm payroll on Friday. We'll talk about that in detail tomorrow, guys. Have a good one.